guys, Jason Schnitzer here with O.C Realtor Talk, and what I've got for you today is a little lesson on what a 1031 exchange is. Now, when we talk about 1031 exchanges, first we have to talk a little bit about what is capital gains. So capital gains is the difference between what you buy a property for and then what you sell it for. Uncle Sam wants to know how much your gain is because they take 20% of that, long story short. So what is a 1031? A 1031 is when you sell an investment property and you defer paying capital gains and move the equity of that rental property into another property, okay? Maybe a little complicated, I'll break that down right now. So in this situation, had a client buy a townhouse at $350,000. And then let me take it one step back real quick. This is different in an investment property because what's different about it versus your primary residence is as a single person, you get $250,000 worth of capital gains exemption when you sell a primary residence and $500,000 as a married couple. Okay, back to this situation. So client buys a townhouse for $350,000. They bought it with 10% down, so they put $35,000 down, and they owed $315,000 when they made the purchase, and currently rented it out, and have it rented out for about $2,100 a month. It's now worth $600,000. So since they've owned it, which has been about 6 years, they've paid the principal balance down to about $280,000, and over that 6 years, this is kind of big picture, they've collected $151,200 worth of rent income. Their initial $35,000 investment is now worth $600,000. So if they were to sell their townhouse at $600,000, they'd pay off their mortgage. With cost of sale, they'd end up with $244,000 of equity. Now, Uncle Sam, if they were just to sell this property, cash out of the market, and take their proceeds, they would pay the difference of $600 and $350, which is $250,000. And there are certain things that'll help you eat away the capital gains. But just to give you an idea, $250,000 at 20% plus state, you're looking at a $75,000 tax bill. If they were to just sell this house, get out of the real estate investment side of things, and then pay their capital gains, of the $244, the next year when they filed their tax returns, they'd probably owe Uncle Sam about $75,000. Again, all this stuff is round numbers. It'll be more specific when you talk to your tax man. So instead of selling and taking their money, what they can do is doing a 1031 exchange. And what that is again, you're deferring paying the capital gains on the difference between the sale price of $600,000 and what they bought it for at $350,000 until you sold the next property. So when you go into escrow on the sale, you have 45 days from the time the escrow closes to name up to 3 properties that you are projecting to purchase. This is all a part of the process. Then after that, you'll have 180 days to actually close the transaction. So what happens when you sell your $600,000 townhouse? Let's say we go out and we name a few properties. And in this case, we chose ones that were in the $1 million to $1.1 million range, which is typically going to be a duplex, or in this case, a triplex in a local area. So we take our net profits of $244,000, we 1031 exchange them and defer using all the proceeds to buy a more expensive piece of real estate. So we'll put $220,000 down. We're going to have some closing costs there, typically between 1% to 2% worth of closing costs. So you got to remember, for every dollar that you take that you don't exchange, you're going to be taxed capital gains on that. So you try to use as much as possible. We're going to get a new loan amount of $880,000 at 3.25%, and then have a new payment of $5,074. And you say, well, why would I want to sell less expensive property to take on more debt? Well, if this was a triplex and each, let's just say you bought 3 one-bedroom units, which on average rent out for, let's say, $1,800 a month, pretty easily, I would say. To do some quick math, that puts you well over the $5,000 mark. So what you can do is re-leverage your property into a more expensive asset with virtually no money out of your pocket. So you went from initially investing $35,000 into a $350,000 property, because these particular buyers went 10% down. And if you've watched my other videos on what I'd do if I had to start over, I would buy a house as my primary residence, putting as little down as possible, renting rooms out until I got to a position where I could save up enough money and do it all over again. So in this case, that $35,000 investment, it created $151,000 of cash for them. It then appreciated to $244,000 of equity, which they're going to reinvest in 1031 exchange into a more expensive piece of property. So eventually they're going to own a more expensive asset with higher potential rent income and then higher long-term appreciation, because when everything goes up in value, it's, percentage-wise. So if something goes up 5% from an appreciation standpoint, obviously 5% of 1.1 million is more than 600,000. So their assets going to appreciate, rents are going to appreciate. When rents go up, instead of one door going up, $100 a month in rent, you've got 3 doors going up $100 in rent. So anyways, and on top of all that, they get to take their tax basis from the purchase of $350,000 and roll that over into their $1.1 million, and they avoid paying capital gains, that $75,000, not until they were to sell this property. And another little nugget for you guys is the great part, and this could change in the future, but as of now, we talk about generational wealth on a lot of my videos, and so in other words, you can pass this property on to your kids. So what happens when you pass on is your whole real estate portfolio gets reevaluated, the tax base gets reestablished when you pass. So you could have a tax basis based on $350,000 that eventually will get reevaluated at what is market value when you pass, and all of your capital gains for your kids or whoever inherits your house gets wiped out. So it's a really, really great opportunity to take advantage of, especially if you've owned a piece of rental property for 3, 5, 10 years. We're really seeing this as a definite opportunity for people out there to re-leverage their initial investments into a much more expensive property. And the cool thing is you could do this anywhere in the United States. That's right. If you're tired of being a rental property owner in California, and let's say you eventually plan to move out of state, you could sell your rental in California. You do have to exchange like for like, which means if you sell a rental property, you have to buy a rental property. So you want to talk to your tax person about showing it as a rental property for at least 2 years on your returns. But let's for example say you want to move to Idaho, you own a rental property in California, you sell it here, you buy what you want to eventually live in there, but in the meantime you rent it out to some good tenants. Well, that's another way of taking advantage of this market and taking advantage of something for your future. So if you have any questions about this, and if maybe it's a little too complicated on this video and want to learn more about how you could potentially use it for your own real estate portfolio, here for a free consultation, reach out to us via social media, give us a call, email, or go GaryandJason.com and book a free consultation online. We're here to help. We love planning for the future. So even if you're a year or 2 out, it's never too early to sit down and touch base with us about figuring out how to make the best decisions on your most expensive asset. So again, thanks for watching. Hope you you learned something today, and I'll catch you on the next one. Hey guys, thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
You know, Jason, I believe is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below and